39.50, 39.50 clears, 39.78. If that clears right about here, 40.10. This was the idea yesterday. It failed here at 40.10 again on the towards the late tail end of the trading session. It failed this number again around 408, 4008 to 4010. It failed again there. So this number is still a valid number to the upside. If it starts to move to the upside, again look for 410, 48 test. And if it clears there, then we'll reassess the situation again into 4077 and for the end of the year probably 4017. So that's a different story right now. Not looking into that right now. Seems like the stance is very bearish, and what would make sense is not these charts. You gotta go into these charts. This is where you wanna make your case whether to go long or short. Let's open up. Come on, come on. All right. So this chart to me looks still pointing to the downside. And if this chart is correct, and if this whatever is right now is happening is if it is temporary, and let's go on the month. So five cleared on the month, very likely looking forward to the eight, 3.29 to 3.3. So if 10-year takes this path to the downside, maybe not a story for today, but if it takes this path to the downside, then the market will move to the upside. Risk assets will obviously move to the upside. Liquidity equation, nothing more than that. So watch this chart here. And of course, for the immediate trading, we want to be going on the lower time frames. Right now, looks like it is trying to bounce again 5, 8, and very likely 3.53, 3.55, the 100 moving average, right? So keep an eye on the daily chart. Here is a MACD. MACD, if MACD crosses to the upside, then we'll have to start taking US 10 as a serious candidate to the push to the upside. As of now, that's not the risk. So this is the 1 hour chart. Now looking at this chart, you can make a clear decision that probably it's going to move up all the way into 3.46 and very likely test this 3.469. If that clears 3.47, right? Unless the technicals come down, this is how it's going to fare right about now. Right. Let's look at DXY as well. So DXY, yesterday I was looking at DXY. Where is that? Here. This is why I was long after the spike in DXY. I was long the markets after the spike in DXY. I was expecting 104.8, 104.18. That did not happen. I was expecting it to hit this and take a breather. It took a breather before that. This is the reason I was trying to be long the markets, right? And this is, of course, coming from what the US 10 was doing. And this bounce happened because of that 10-year spike to the upside after that higher for longer commentary from the Fed, and properly it gave way to the downside, and it's starting to push to the downside. That's exactly what we want to see it happen, right? And if it breaches below here, then there's still room to the downside. Let's go DXY, and I think we already done the 10-year. So let's look at DXY. DXY and 10-year both move, in tandem. So if you look at the 10-year chart and the DXY chart, the technicals are pretty much the same, right? So expecting it to move again, test the 5, test the 8, take a breather. If it clears the 8 here, around 104.90 to 105 range, then we'll look forward for a test of the mean. I would not be looking at DXY as a serious candidate until it clears the 200 moving average on the day, 105.80. That's if this happens, even if it comes up all the way to the 200 moving average right here, 105.90, 106. This will cause a lot of damage, right? It took pretty decent, I think, 1 week, one whole week to come back down, reach that number, and come back down from there. And if it pushes up just like that in a couple of days, this will cause a lot of damage to equity markets, right? So we don't want to see that happen. If it moves up, we want to see it move up gradually, not in a flash. And if the velocity of the move, if it's high, it would be too much for the markets to handle, and very likely it'll see better than 2% push to the downside, or even maybe 3% push to the downside. So this should move up, but move up in a very gradual manner. And whatever is happening here, I'm expecting this to be an ephemeral push to the upside. Maybe it might last into the mean on the daily, or it might even test this 200 moving average, but it has to take a breather after that. Why? Because if you go into this chart is suggesting a bounce here, so we'll wait for that bounce, but the MACD is still crossed to the downside, right? So this is telling whatever the bounce will happen here, that will be an ephemeral bounce. And look at the month chart for this, and the monthly chart is still suggesting point to the downside, right? So we want to see it push all the. It could be if it is bouncing just like it is doing now. I'm expecting it to be an ephemeral bounce, not really plotting in anything above 105.90 to 106. But to the downside, it needs to come back down into 102.24 all the way here, 101.70, 101.80. Right. So this is the expectation from DXY, and similarly, the expectation from the 10-year is to come back down into 3.3, somewhere around that area. So if these two move down, obviously if 10-year moves down, then the DXY will move down. And if you have these two moving down into the 8 on the month, then very likely you will see the risk assets move to the upside. Right. Uh, and more than this chart, you want to be watching these charts. Now let's get into VIX for a little bit here. VIX is trying to bounce. This is a long-term bottom for the VIX. Is trying to bounce off of that level, but so far it's unable to clear that 50, and it's still holding there. But there are bright chances coming back up. I don't know when this is going to bounce, or when this is going to turn, a cycle like this. But for now, it's not there yet, right? It's building. It's slowly building. So whenever that happens, we will be there to catch this bounce in VIX. In other words, the push down in the markets. Whenever that happens, but for now, it's building. Let's see VIX here. On the daily chart, VIX is still struggling to keep the momentum going. It is hitting that highs and starting to come back down. Now, again, to the downside, if it comes back, if it breaches the inner Bollinger Band right here, 2130, it'll come back down into 2040, 2050. Then again, we'll look for a bounce around 1980. Yesterday, this was supposed to happen. It was supposed to crater below there and test this number. Did not happen. We still have MACD cross to the upside. So keep a close watch on this number. Maybe it'll start, bouncing around here. The mean is tested. If the mean clears, then above 2215, then a push all the way into 2250. We will reassess the situation after it clears right here, 2215, the 5 and the 8 on the daily. We will reassess the situation here. And to the downside, we'll reassess the situation below 2133. Maybe it's a good idea to go here on the 1 hour chart and take a look at VIX. Right here, it's trying to bounce. Same thing, 5, 8. If 8 clears, Bollinger Band here, 2187. That clears. This should act as pretty decent resistance. 2195 to 22. If that clears, 2211, and that would be the mean reversion on the day, right? And if it clears the mean, then we'll look forward for the further path, 2230 and perhaps into 2260. You know the drill, right? You know the drill, how it goes. So keep a watch on this chart, and if it follows to the upside, then we'll go along with it. One another thing that caught my eye was Bitcoin. Yesterday, I mean, day before yesterday, even though the markets were down, Bitcoin was up. Give me a second, guys. Right. I know, right? Dan. All right. So Bitcoin is an interesting chart. Bitcoin still wants to move to the upside. Bitcoin is still there. Bitcoin has this SMI clear to the upside. Last two cycles, it couldn't clear all the way to the top of the range, but still expecting that at least a half a cycle again. So that should give us the mean reversion one more time. Probably, we'll test 18.6, 18.7 or something like that. That clears probably 19.5 again. So Bitcoin has been, doing this the same thing. It hits that second standard deviation, third standard deviation, tries to go back to the mean, comes back down, again hits the mean, comes back. This time again, I'm expecting no difference in the story. It'll try to hit the mean on the week and still try to come back down. I think that's just how it's going to play out. Uh, but the thing is that the volatility has died out here, and I'm expecting the same to happen in the equity markets once you have the retail. Right now, the retail is pretty much moved out of the trade, and you can see that in the data, the options data at least. Majority of the people are just playing zero DTEs. They're not even into swing trading or anything. That's gone. So people are just piling into that zero DTEs because now you have SPY zero DTEs as well. So that's happening there. That's the retail crowd is still playing that, cheap contracts, zero DT contracts, and still getting burned on those because most of the people do not understand how IV plays out. uh, for example, yesterday the IV got started to get super amped up around 130 and died out around 158, 159. Right, so people who bought and sold between that range, especially from 140 in the morning, in the afternoon, up to 158, 159, those people made a lot of those people made a lot of money, or the maximum amount of money. Then some people who stayed in for the push to the downside, they made some money, right? But besides that, what I'm looking at Twitter, and what they are saying was what's that? What's the word they're using? Blah, blah or may or something like that. FOMC was blah, FOMC. But we pretty much we caught all the big moves yesterday, and again that was based on simple technicals from the uh, from the 10-year, right? 10-year in combination with whatever the DXY was doing. So even now, if DXY moves to the upside, which I think it should try and come back up here, and then obviously you'll have an impact on the it will have an impact on the markets here. Right. Okay. Let's get into Apple. Apple here, it's pushing down, and right now it is below the second standard deviation here on the week. That's not good. Sorry, one standard deviation on the week, and if it pushes down, obviously it's going to hit this 133, and it'll stall around there, and probably after that push down, very likely it's going to push down into 123. And the long-term goal, or the long-term number, I think Apple still needs to test is right here, 120 to 117. This is still the number that I would want to see Apple get tested, and probably that's healthy. For now, it is within the range. It's sticking within this or the one standard deviation on the month. It is still within that one standard deviation, but by and large, the what do you call the trend is to the downside, right? Even with these big spikes on the month, the trend is still to the downside, and I'm expecting this trend to continue to the downside. And if it breaches below this one standard deviation, very likely it's going to go for the second standard deviation. So keep a close watch on that, and we still have MACD here cross to the downside for the month on for Apple. Right, so this will play out. This will play out, and this will go down here, and very likely this will also get oversold conditions. And then this is not a story for now. This is a story for Q1 next year, perhaps. Jan between anywhere between Jan to March. This is the story that will play out then. Maybe the earnings might trigger it. Maybe there's some China event that we don't know about. something will trigger it, but this needs to still come back down. This needs to still get oversold. Then we'll see a pickup back up again. And it's been elevated for a very long time. We still need to have this event here, right? This is very rare, but yeah, it comes about. Well, at least we need to see a half a cycle here, and once the SMI starts to curl to the upside, and we'll pick up some Apple again, right? So I'm still waiting for this to curl to the upside. Once the SMI starts to curl to the upside, it tried here, but it failed, and the idea is still pushing to the downside. And once wherever it starts to curl, either at this green line, -40 area, wherever it curls starts to curl to the upside, then we'll start to look for an upside in Apple and by extension in the markets. We're not there yet. And let's look here. And if Apple starts to push to the downside, very likely the first push, first bounce, 140.63. That breaches 139.90. And if that breaches, very likely 136.40. Today, not really plotting 136.40. Let's go down here on the 1 hour chart. Looks like Apple is getting oversold here. Still waiting for this green line to kind of hit this lower end of the spectrum. Then we'll look for a bounce in a meaningful manner. Till then, we might get another bounce just like this one here. The RSI bottomed out and we saw a spike in the RSI. Same thing, very likely to happen here. And the Williams R is always all the way down here. The only difference, right now, or at this spike and this push to the downside is we're missing this line here, right? We are still not there. Apple is still not there for in oversold conditions. Perhaps by the time this green line comes all the way down to the end of the range, very likely this will again create a oversold conditions here. Then we'll look forward for the push to the upside again. MFI on the regular candles is still in not in the oversold conditions like it was here, and so we still are monitoring that situation. And if we get any bounce, technical bounces here and there should happen. Like right now, if it clears this 141.70, we're going to expect to push all the way up to 142. And if that clears, very well push into 142.70. Right now, we are not there yet. Maybe the push down is 140.54. Right, let's go down. There you go. Oversold conditions trying to come back up. Again, oversold conditions trying to come back up. So if you're trading on a lower time frame, I think today is a good idea to be trading on a lower time frame. 8 below 21 is still valid, so upside would just be scalps unless this 8 above 21 happens. Unless that scenario materializes, I think it's just scalping. 8 20, 5, 8. If it pushes below, beyond up, beyond 8, then you can expect it to hit 142.10. That clears. The mean is sitting at about 142.40 as of now. Not plotting anything beyond that. If it clears the mean on the 15-minute chart, again, these lines are all dynamic. These keep changing every 15 minutes on the 15-minute chart. So if it clears the 5, a hit of 8. If it clears the 8, then expect it to push 142.10. And if it pushes 142.10, then very likely 142 to 40. That's for Apple immediate trade. Let's get into Tesla. Tesla 1 hour chart. Could be oversold. Yeah, it is still. I mean, this is right now Musk selling. That's pretty much it. So Musk selling, that simply would imply that many other institutions are also selling. So there you have it. You can't do much about it, right? But looking at this chart here, it is still a candidate for bounce. If Musk stops selling, very likely it's going to hit a bounce right about here. It is still holding this number. So let's see how it goes here. If it breaches here, very likely 134 is the area that you want to be watching, right? So I have a pretty decent sized position in Tesla equity. So I've sold calls or covered calls on my equity. Then I bought puts, protective puts for Tesla. So my equity position is covered there. Doesn't matter what happens, my equity position is covered, right? And I've also sold a bunch of naked calls here, so that premium will be my profits. And if it comes back, if it starts to push to the downside, I have puts, protective puts, but those are, unless I exit those puts for a bounce trade, I'll not be profitable on those puts because my shares will be called away, right? So that's how the protective puts work, right? And Tesla, and looking at the technicals here, MACD is still crossed to the downside, so very likely it will still continue the push to the downside. Well, I'm hoping for a bounce before a push to the downside. But if the broader markets, keep selling off, then there's no point looking for a bounce. If you have equity in Tesla, probably look to sell some covered calls and buy some protective puts with that proceeds. Right. Okay. And let's go Tesla here. Tesla. Yeah, it is breaking all sort of technicals, and this is not a technical sell-off. This is just Musk selling. So nobody can do pretty much anything with that sort of selling come into picture. But the technicals are pretty much pulled to the downside. Look at this Williams R. Anytime the Williams R comes down this far, it starts to pull to the upside. Technically, that's what it should happen. This thing right here is pulled all the way down here at the lower end of the range, so we'll look for a bounce again, right? So similar sort of a bounce. If Mr. Musk is done selling, we'll look for that bounce. If not, it'll keep selling off. Can't do much about it. All right. Anybody, anything in particular? Adobe earnings today, 6.7% move. Previous move was 16%. I know I was caught in that move to the downside, but I held through that and it came back up. DX1 and market dropping similarly, which one is lying? Very likely the markets are lying. All right, let's move into live trading.